Good morning. So I hope you had a great weekend. Uh, Plenty of time to recharge. We're waking up and starting the new week with a nice gap up. So we'll try to form a good game plan. How to handle this, how to play this. I think that will be the goal of this session. So let me maybe we'll wait just 1 or 2 more minutes just to let people join in, and then we'll start this session. All right, so let's dive in. Um, I'll try to just yeah, and you know, last market cycle during that nice uptrend, that was the same thing. So once price is starting to trend above a rising 21 DMA structure, especially when it pushed to new highs, when breadth is expanding, so McClellan summation in an uptrend above the 10 DMA, um, and breadth extensions are not overbought, not stretched, then I'm really putting myself in a mindset to just not try to anticipate or try to know how far, how long this trend could last, but instead just acknowledge that price, breadth, and momentum is in an uptrend, that there's nothing to overthink. And when red flags start to pile up and we have some position to that stops us out, then it will be time to just reassess where we are in the trend, and if we do have more room to the upside, or it's time to digest. So I'm really trying to keep it simple, and it's by design, because if you start to just try to anticipate, okay, we have a gap up, we're extended, we'll pull back into the 21 DMA structure, but then the market locks you in and locks you out, and then just continue higher being extended. Or if the market pulls back into structure or have a big nasty red day and you think that that's the end of the trend, but the following day it gaps up and just get a runaway gap, and you get that trend continuation. uh, so for me, that mindset is by design. Like I said, once I see that things are trending price and breadth wise, I'm just focusing on my portfolio, on my position, what they do, where they are, according to their 21 DMA structure, and that's all I'm focused on. So pretty quickly, price above the 21 DMA structure, breadth still not overbought, and let's look for breadth specifically. I like to use at the normalized now that we have it. So McClellan summation, nice uptrend above a rising 10 DMA. We're not by a mile overextended or overbought in the larger picture. We're still negative on the McClellan. So we're still trying to turn the corner, potentially a new bigger uptrend taking shape. But once again, I'm just not trying to anticipate it. We'll have to watch normalize McClellan oscillator. Um, as with this morning gap up, will probably be overbought above one standard deviation from the average. So it doesn't mean sell everything, doesn't mean over trim. It just means that hey, the market might be stretched a bit short term, uh, and not trying to anticipate the end of anything, but just to recognize that the risk reward is not there anymore for new buys. That's the only thing that I'm using it for. Um, so yeah, just really trying to be to be aware of the price being stretched. And let's look now at the futures. That's what I wanted to show you. So if we look at the futures, especially Nasdaq futures, so if you look at the larger picture, right? So we're still having that big multi-month breakout, base on base breakout as well, with a nice retest, high-low structure, and push into new high. So the trend is clearly re-engaged. We're trading at new all-time highs. So God knows where we go, and if someone tells you where we go, I suggest to call their bullshit. So nobody know where we'll go. That's the only thing that I can guarantee you. All I know is we're trading into all-time high, and like I said, the McClellan oscillator will be in the overbought territory. And now we're trading at 2 times ETR from the 21 EMA. So that's pretty stretched. And you also have we're not quite too extended from the longer moving averages. So the 10-week moving average, we're at 2.8 times ETR from the 10-week moving average. So we can see more extension than that. But just recognizing that we are 2 times ETR from the 21 EMA just tells me that hey, it's not a good spot to take new longs. Yeah, the market can go into lockout rally and all that, but uh, you will be able to put size at this point and be rewarded 1 times out of 10, and the nine other times you will be faded, you will be chopped, and you will take losses where you should have just waited for the market to cool off, stress test, show some weakness, to allow for some entry. So I know a lot of people don't have the exposure that they would have wanted. And this market, after being giving us that retest of the 21 DMA structure last week, is two gaps up back to back, right? So we had that nice bounce, but then Friday was a gap up, and today is another gap up. So making it very, very difficult to position itself in this market. And that's what market do, and that's why I like to position myself when it's ugly, when there's weakness into support, because I know that more often than not, the market will just breakaway gap like that, and that will be very hard to have good positions, low risk position into the leading stuff. So I'm not saying that to rob it, not at all. I just want for people that don't have the exposure that they wanted not to put size on such a gap up, and to be patient and wait for proper weakness, wait for the market to cool off to put size on again. And that will come. The market will not run for forever. It will not go at 6 times ATR from the 21 EMA. At some point, it will pull back, it will stress test, it will give us an opportunity to add back exposure or add exposure if that's your case. And that will be a much better spot to do so. So yeah, I know it will be hard to be low exposure and to wait. FOMO will be high, but learn from it. That's a great time to be motivated to go back and look at this period that was very hard to position. But if you can pinpoint what to look for the next time the market uh, has a similar setup, and trust me, that happens a lot in the market, to see that base breakout, pullback range, and then that breakout and retest setup. It happens very, very often. So learn to recognize it. Learn to recognize as well in the setups, in the leading names, how they were forming, how they build their higher lows on the right side, how they were constructive, how they were building relative strength compared to the market, and then the next time it happens, you will be ready to strike and to put good exposure before the market breaks out and gaps like it does right now. So that was my rambling. All right, so we covered the market. I made my rambling and my my mentor style speech. Now let's look at the exposure and Focuslist. But Focuslist don't have big expectations. But what I want to do is to show a bit what I shared over the weekend, what I look for. Let's say that the market didn't gap up today, what I would have looked for names to set up and to make it into the focus list. So Rocket Lab, I'm still expecting this as being the first initial bounce into the 21 DMA structure, and potentially maybe retest kind of that area. So obviously if it just run and goes and V-shaped recovery, I'm happy. But I'm always looking for the scenarios that could happen within normal price action. So normal price action is retest of structure, bounce, lower high, building a higher low, and tighten up on the right size at the right side as it build the wedge, the base, the range, as it just digests the recent move. So if it goes, it goes, but that's a kind of initial bounce into structure that I'm usually looking for a retest of structure. So let's see if we can get that. Tesla, oversized position for me, as you know. So I was playing that 21 EMA / delayed reaction of earnings and that larger base structure where we are very constructive, build a nice weekly flag above. And for me, that's the larger setup and why I went aggressive on Tesla last Friday. D-Dog, a bit like what I explained for Rocket Lab, right? Initial bounce into structure, back test, high low, and now it seems to just want to chop around a bit. That's a choppy name, a lot of mean reversion, so don't be surprised that it's not an easy going and straightforward trade. I will be happy if I take my 2R and just leave it alone. That's a good name. They have earnings coming up pretty quickly, so I might be tempted to just cut that position and call it a short swing trade if we don't get the cushion this week. CRDO, nice gap up. So we have that range, so low cheat range. That's very typical Mark Minervini low cheat range breakout setup. And yeah, we had that breakout last Friday on that gap, retest of the structure, So no, it's not, it does not want to kill you or stop you out. It just retests the structure, the range structure, and then it gaps up again this morning into new highs. VRT new highs. 7 hard target is the next area of interest. Same thing for Dell. Same thing for CrowdStrike, new all-time high. Same thing for Snow. And CEG, that I would still expect for some back tests. Especially, we covered that last Friday morning, but when I look at the group, so yeah, maybe we V-shaped recovery and just go into new all-time high. Uh, but probably TRs that we rally into declining 21 DMA structure, and we have to maybe just build the right side from here. That would be kind of my normal price action expectation, but if it goes, it goes. And same thing for GEV. So GEV had that rally into declining structure and rejection. So that's kind of the setup that I'm looking in the group. So VST, possible rejection. GEV had it last Friday. And CEG is, like I said, the group leader. Very nice and strong bounce from the base structure, from the 21 DMA structure as well. And now that we are getting here, maybe look for a lower high as we build the right side and continue that basing process. Micron, new high, nothing to do. AMD, new high, nothing to do. We have earnings coming up next week. So that will be one to watch for sure. I am on my last third, so for me it's ready to trail that 21 DMA structure, and I will go into earnings with that runner size as well. All right, so and now for Focuslist, what I wanted to do is a bit different. So just tell me if you have a chart request or and maybe not actionable setups, keeping in mind where the market is this morning, but uh, just maybe you want to know about structure, about how what would be the scenarios that I will look for in ABC names. That's something that we can do this morning instead of looking at a fresh new setups. So, TradersLab, what I like to do is go into my daily scan. So that's where I take all my my trade ideas. Let's do weekly, daily. It's not better. All right. All right, let's do like that. It will be easier to see. All right, so that's the same kind of feedback that I want to give you is to what I watch. Yeah, the market had a news, it gaps up, etc., etc. But if we didn't have that gap, what I would have looked for today to engage, uh, I'm already pretty aggressive, but just uh, to recognize the setups and provide some setups for you. Obviously, with 140% exposure, I wouldn't have looked anyway to increase that exposure, but I always like to keep fresh setups in mind. So, Rocket Lab, like we discussed, initial pullback leg into structure. So once you get that initial leg higher, what I want to see is the initial back test. So we have that 21 DMA structure reclaim, and now I wait for the retest, high or low structure on the right side, and that would have make me interested. So now it's kind of up 2 days in a row, 3 days in a row now with that gap up. So obviously it's not a spot to watch. NBIS, good leader stock. What I would have loved to see is either that's a lot of power into the retest of the 21 DMA structure. So now it will gap up above. So we would have a 21 DMA structure reclaim. And now the game is to wait for the retest. So on the right side, let it go and then let it come back to you as it retests the now rising 21 DMA structure on the right side. Oklo, same thing. So either that you wait for the 21 DMA structure reclaim and then a couple days later the retest that will give you a nice low risk entry, um, or the rejection here. So we're running right into the declining structure. So maybe if we didn't get that news, we would have some kind of rejection of that structure, build the right side, so a potential higher low, and then you can initiate or go for that higher low structure and 21 DMA structure reclaim. That would have been something to look for. AVGO, same thing. We have that 21 DMA structure reclaim. So you wait for that back test. Same thing for ASTS. So now it ran into a declining 21 DMA structure. You wait for the higher low, or you wait for the reclaim and back test. Same thing for core weave, rally into structure. You wait for the higher low or the gap up and now reclaim. And eventually in the next few days, you wait for the back test. So I think you see the picture. For me today, even without that gap up, it would have been kind of an observation type of day where a lot of the setups are just rallying into overhead supply, and you wait. Uh, do they reclaim and push higher from here? In which case, you wait for the back test a couple days later, or the market gets a bit of weakness. They reject their overhead supply, the 21 DMA structure, and then you wait to see if they form higher lows or they roll over and make a new low, which invalidate the setup. But just look and be patient and observe which of those scenarios will form and what type of entry you will get. Um, so yeah, that's what I wanted to cover quickly this morning. And now let's take some questions. All right, so hello Alex. If the market is stretched and for example in Tesla we don't have too much traction, that means maybe we have to reduce it. Yeah, Tesla is a bit a standalone position for me in the sense that um, Tesla for me is kind of a delayed reaction. So we have the earnings as a new catalyst. Um, so we had Friday kind of fade. We'll have to see how it behaves today. But Tesla sometimes can just run it on its own, at its own beat. So I wouldn't kind of overthink and just let the position play out. To be honest, that's my plan with it. And like I said, I just treat this as a delayed earnings reaction, and sometimes that could really drive the stock, despite what the market will do. And like I said, and that's a very important point that I want to reiterate. It's not because the market is stretched, it's not because the market is overbought that you start to sell your exposure, that you start to over trim just because you're scared to give back some profits. It's a time to recognize that the risk reward is not there anymore to open new exposure, but your exposure can continue and work for a longer time that you think. So you never know, right? Maybe the market is extended and will just flush back and stop you out of everything that is that you don't have a big cushion. But that's not how you ride exposure for the bigger trend. And over time, you want to be patient with that exposure when you have it, uh, even if the market is extended. At least that's how I trade. And a bit like what I said at the beginning of that session is when the market is in a confirmed uptrend, breadth and price, I don't want to overthink anything. Just trust my position. I have my stop loss in place. I have my trims level in place. And the market can continue in that lockout type of trend longer than you think. And even if it just goes sideways, you will have stuff to that decouples. You will have stuff that just run away without the market even up a lot each day. So that's why I like to focus on the summation index as well, because when breadth expands, even if the market goes sideways, if breadth expands, then you will have traction in your position. Maybe that your equity curve will not be as steep as the first few days after a pullback, but it might grind higher. Some position will be red, but overall you will be green, and your equity just and your capital just grind higher. So you don't want to get out of that either. All right, so if there's time, I know precious metal are not your focus exactly, but silver, yeah, sure. Let's look at silver. And yeah, I think I do think that gold and silver and pretty much all metals kind of had their climatic move here, and that's learn precious metals. Go back in time, and that's how precious metals moves. They spike, they crash. They spike, they crash. It's very, very rare that you get like big sustained trend in precious metals. Yeah, gold has been on a tier, right? But look when we have these kind of climatic moves where the rate of change really increase a lot, you get those longer multi-week month period of sideways action. And this is really, really constructive. This is healthy. But you just cannot expect something to run forever. And I think that goal is right in that type of area right here, where you get that climatic move and then initial breakdown into structure. And typically, and that's how it usually moves, is you need time to digest. Not 1 2 day, not 1 2 weeks, but probably multiple weeks and even months. That's kind of the higher probability scenario for precious metals and gold and silver. That's the same thing for silver, and they will all trade together, right? So if they go sideways for months, gold, silver, palladium, they will all go sideways together. So right now, same thing for silver, kind of climatic move, and I would expect longer digestion from here. So yeah, it can continue and just make a historic move. But always ask yourself, where are the odds? What are the probabilities, right? So, Alex, do you have a long-term portfolio in addition to the swing trading portfolio? If so, can you elaborate? No, I don't. I don't. And I will probably in a couple years when I want to diversify. But the bet that I made, not a bet, that's not the right way to say it, but the commitment that I made is that I want to compound my capital the fastest that I can. Uh, and yeah, two things. So clearly, I can compound my capital fast with swing trading, um, based on my recent performance, right? And I don't mean the current year, but the last 5 years. So so that's one thing. But the other thing is, do you have a sustainable trading system? Do you have good risk management? Are you in this to make it quick, rich overnight, and you're at risk to blow up? And if you are too aggressive, if you go for the home run every time the market gives you an opportunity, and you take big drawdown, then I would say it's probably a good idea to have something long term. Put the biggest part of your capital in there and swing trade with play money or smallest capital. But for me, I kind of developed my trading style where I trade liquid leader stuff. I have very good risk management. I manage my risk at the portfolio level. I don't take too much risk. I manage my drawdown very well. So knowing that, I'm okay to have my main wealth creation vehicle being swing trading. Just because I'm not too aggressive and I don't put my capital at risk every market window. So yeah, I'm trading my most of my capital. Yes, I have some long-term portfolio, but I don't manage it. So that's kind of all the money that I had from previous being a full-time trader. So I do have some long-term portfolio, but my point is I don't manage it. It's not for me to grow that account. I'm really focusing myself on swing trading alone, and I'm convinced that that's the best way uh, to create wealth for me and for my family in the next few years and decades. All right, so only chart, Vic. Hmm. Yeah, there's some consumer services, hotels, resort, cruise lines. So there's airlines as well, kind of setting up. Um, but yeah, like I said, I wouldn't look to engage with the market that extended. But yeah, it's yeah. So you have that pullback, you have that 21 DMA structure, you have that retest. It looks a bit weak, to be honest. But you have that retest and that range, and we're still building higher lows on the right side. So what you can do is look at that daily reversal pivot, and if it goes, it goes. If you reclaim the 21 DMA structure and that reversal pivot, then you have your setup. But I wouldn't take that on anticipation, as Friday was kind of a weak day, closed in the low of the structure while the market was pretty strong. So yeah, I would not engage too low on that. Soon, soon. It will soon break out. Sorry. Um, yeah, I think I will say the same thing that I said on Friday. I would look for that fail breakout, bounce, and kind of back test on our initial rejection and higher low creation, and then earnings will be pretty close. So yeah, if you're already in, you can hope for that V-shaped recovery and breakout from here. But if not, I would be patient and wait for some weakness and right side to form. Neo, yeah, China stocks seems to set up well. It's definitely not for me, as you know. I don't trade China stuff. But yeah, there's a nice flag there. You can play the 21 DMA structure reclaim. Baba's trying to get out of that same setup. So yeah, there's definitely a setup in Neo if you don't mind trading China names. So Tuba can you please go through some examples and explain daily? Yeah, okay, sure. Uh, let's take the Qs for example. So if we backtrack a bit, right? So what is an uptrend? An uptrend is higher highs and higher lows. That's structure wise. That's what an uptrend is. Price makes new highs, and when it pulls back, it makes higher lows. What is a downtrend? A downtrend is lower highs and lower lows. Then what I like to watch for is kind of the first initial switch of structure. So I try to engage in an uptrend when the stock or the market is pulling back. So what it means is short term we have a downtrend, lower highs, lower lows into structure, into support. And what I want to see is a flip of that structure from downtrend to a potential uptrend. So meaning that after that pullback, we try to switch from the pullback to a continuation of that uptrend. Um, and you can spot that on the lower time frame, intraday, for example. But the way that I use this with daily time frame is that I want to see that. Let's take an example of a larger pullback. So right here. So let me, okay. So that high, lower high, lower high, lower high, lower high, lower high, lower high. Lower low, lower low, lower low, lower low, lower low, lower low. All right. So I think it's pretty clear that we have a short-term downtrend within a larger uptrend, right? We're, we're still making a higher low. We're still making higher highs on the larger trend, right? That's what you want to see. You don't want to play this in a downtrend. You want to play this within a larger uptrend. And what happens here? What happens here is you get that first initial higher high. You are breaking that short-term structure. At the same time, just before, we make the first higher low. So now you just switch from lower highs, lower lows to a first higher low and first higher high. So you just switch that structure from a short-term downtrend to a short-term uptrend, and probabilities are that you potentially resume that larger uptrend. So my system is a lot developed around that, playing the short-term pullback, the short-term downtrend into a longer-term daily structure, and to watch for those clues that the short-term structure is switching. Is it clear? Great, perfect. That was a good question. That's very kind of details, technical analysis, uh, very detailed technical analysis, but so important to understand kind of the price cycle and how stocks and market moves. Um, how about ASTS? Yes, I covered ASTS a bit earlier. And I'm still looking for the same thing on ASTS. So ASTS, I don't like that right side. I don't like that multiple gaps down into structure. That was a pretty nasty 35% drop in 4 or 5 days. So I think that gaps will be kind of a challenge to kind of go through and to reclaim. And it was a bit lagging um, last week. So I'm still with the same scenario where we have that initial kind of rally into declining daily structure. And I would look either for the right side with a higher low structure, or we just go here. We retest maybe kind of that structure here, and you wait for the 21 DMA structure back test once it happens. All right, so 9:23. I hope you enjoyed the session today, guys. Once again, the game plan for me is just to be super patient. Uh, OTL or yeah, sorry, I forgot that one. Oh. Yeah, same thing. I think it's lagging a bit. I'm seeing kind of that whoop, that bear flag into declining structure here. Um, I would really look to see in be in observation mode if we have that higher low structure and then get that second attempt of base reclaim, structure reclaim. And if the market is really strong today and you get that reclaim, then watch for that back test in the next few days. I know. Yeah, same. That's the same thing. There's so many of those, and even in my liquid leader scans and my daily scan, that's kind of why I wanted to show you guys how I'll look today's ASTS, Oklo, NBIS, Rocket Lab, and that's all the same patterns. So you get kind of that deeper pullback below the 21 DMA structure, Now you have that rally right against it. So observation mode, do we reject, make higher lows? Whoop, sorry. Make higher lows, and then we set up further in the next few days another reclaim. Or if it goes today, then wait for that back test. Maybe it's not that high. I exaggerated a bit, but like that. So the 21 DMA structure will start to rise, and you will have your back test. That will be your low risk entry. Instead of chasing kind of 4 days of runaway gaps from the lows, that's not a very good risk reward spot to engage here, in my opinion. We're rallying right into overhead supply. So observation mode, that's what I would say for INOD as well. Yeah, MDB, I covered that name a lot last week. I don't like it. Zoom out, look left, structure leaves clues. That's something that I used to follow, that was seeing that, and that really stuck with me. If the stock is looking like this is a mean reversion machine. Every time it pops, it like to drops. Why would it change just because you take a trade, right? So I'm not saying that in a bad way, but something to consider is always look for the character of the stock. If it trades bad, if it don't like to trend, and you look at history the last 7 years, and it's not able to trend at all. Apart, kind of the only two trend that you get are 2020 and 2021, which are kind of once in a lifetime market. So if that's the only time it's able to trend, expecting that kind of market right now, if you take that trade, you're kind of putting yourself in a very low odds. So yeah. Oh yeah, we didn't cover the internals and Bitcoin. Good point. Um, yeah, and scenario is playing out for Bitcoin, right? So that's what we were looking for last week. So last week we were looking for where it would swing. So rejection or reclaim. So now we have the reclaim. Now it's getting interesting. We're being rejected a bit into recent swing high. So maybe we build some type of range. But either way, I would look for a retest of the structure here. That would pull me in. I don't have the, I have the exposure that I want, so I want to engage, but that's something that I would engage. So if we get that back test here, or if it wants to break out, then you can look maybe in the next few days for a back test of that structure. 21 DMA structure will be in range by then. So yeah, that's what I would look for. Right now it's a bit extended. I would really look for some weakness to engage Bitcoin. And keep in mind, we're still in that larger trend, larger base, sorry, and just trying to get out of that low cheat range at the moment. So we're still pretty early. All right, so guys, 9:30. Have a good day. Have a good trading session. If there's questions, I will be in the trading pit. And yeah, take care. Think risk first, and think in probabilities always. Is it a good risk reward spot to engage? So yeah, have a good day. Bye bye. Cheers, everyone.